Today, let's explore the latest updates on SoFi's performance, focusing on the influential data points that impacted its movement, alongside an overview of how short-selling activity has played a role. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. Recently, SoFi stock experienced a 2.32% drop in after-hours trading, though it showed slight recovery afterward. Currently, its price fluctuates between a low of $13.39 and a high of $14.28. With a trading volume of around 54.9 million shares, just below the 60.9 million average, SoFi has drawn considerable investor interest, driven by various economic indicators and shifts in market sentiment, including the latest Consumer Price Index (CPI) data. The CPI, which gauges inflation trends, met analysts' month-over-month and year-over-year expectations, seemingly indicating positive progress toward the Federal Reserve's target of 2% inflation. However, digging deeper into the data reveals more complexity. While energy prices declined, boosting the CPI figures temporarily, other areas within the consumer basket saw price increases. This explains why the Fed often prefers the Personal Consumption Expenditures (PCE) index over CPI, as the PCE provides a broader view less influenced by energy costs. Even though CPI data initially appears positive, the underlying numbers show that inflation control may still be challenging. We've observed a pattern where CPI reports spark short-term rallies, which large institutional investors often follow by quietly selling off assets after reviewing the comprehensive data. Alongside these economic indicators, broader market indices and many stocks are currently at levels that could be deemed overbought, making them susceptible to price swings whenever economic signals show any hint of weakness. This CPI release has added to market uncertainty, alongside global issues like potential trade tensions between the United States and China. Investors are monitoring developments closely, as these tensions could impact certain sectors in the coming months. Despite this uncertain environment, SoFi's resilience has been noteworthy, as it managed to maintain a relatively stable position amidst the broader market volatility. One particularly notable aspect of SoFi's recent trading was the activity from short sellers. As of today, short sellers have returned approximately 5.7 million shares, which signifies partial covering of their short positions. This trend has helped put upward pressure on SoFi's stock, which has contributed to some of the recent price movements. It's also important to mention that there was no breaking news specifically related to SoFi, nor any new SEC filings. This indicates that SoFi's price movements were largely influenced by broader market factors rather than any internal developments within the company. Another major factor affecting investor sentiment is the Federal Reserve meeting scheduled for December 18th, where there's currently an 82.3% chance of a 25 basis point interest rate cut. If this reduction is realized, it may serve as a catalyst for a rally in stock prices, and investors could begin pricing in this likelihood soon, potentially leading to increased market movement in the coming weeks. In terms of options activity, SoFi's options market has shown considerable action. Call options, which are typically associated with bullish sentiment, saw a trading volume of approximately 33 million, while put options, generally indicating bearish outlooks, were around 5.82 million. Approximately 46% of the options transactions were bearish, indicating a mix of optimism and caution among investors. For the call options purchased today, there's a consensus targeting the $15 range over the upcoming weeks. In contrast, put options are focused on a lower price range of about $12.50 to $13, reflecting some bearish expectations. Despite this, the higher volume in call options suggests a lean toward an optimistic outlook for SoFi, though caution persists. New option chains for SoFi have also been introduced, though they currently show minimal volume. This could present opportunities for long-term investors. For instance, those selecting an expiration date of June 20th, 2025 might consider a strategy such as selling a call option with prices around 44 cents, offering a potentially attractive return for those with a longer-term perspective. If SoFi were to experience another growth phase, as suggested by its recent one-month increase of 38.37%, these new options could become valuable assets for investors aiming for premium income. Let's take a closer look at short-selling activities. By today's end, short sellers had returned an additional 920,000 shares, representing roughly 14.49% of the total float, or 154.35 million shares that are currently being held in short positions. Earlier in the day, shorts covered approximately 5.7 million shares, alleviating some of the selling pressure that contributed to today's downtrend. This gradual covering, combined with broader market pullbacks, highlights the influence that short sellers have had on SoFi's recent stock movement. There remains an available pool of over 10 million shares that could still be borrowed and shorted, signaling that if short sellers believed there was a compelling reason to bet against SoFi, they could easily increase their positions. However, their caution in further shorting might indicate a degree of restraint or doubt regarding a significant downside for SoFi in the immediate future. Additionally, a unique aspect of recent short interest has been fluctuations in the cost to borrow, which has gone negative again, currently at 90.13%. This unusual rate could provide incentives for more short selling of SoFi stock, which might result in future spikes in short interest. Whether this will lead to additional shorting pressure is uncertain, but it's a trend worth watching as the situation develops. Examining trading activity in SoFi stock today, we observed a series of large trades over $100,000, especially during after hours. Among these was a significant sale of approximately 1.69 million shares, as well as trades during regular trading hours, especially in the final hour of trading, where activity was mixed with both buying and selling. Overall, there was a higher volume of selling today compared to previous trading sessions, which is somewhat expected given the recent factors impacting SoFi stock. One final note relates to broader economic conditions that could shape SoFi's future performance. The upcoming Federal Reserve meeting and decisions around interest rates may prove to be pivotal, especially with inflationary pressures still lingering. The market is likely to closely monitor the Fed's actions and any additional measures aimed at stabilizing inflation and supporting economic growth. Additionally, global factors such as potential trade policy changes between the U.S. and China could bring new risks or opportunities, depending on how these issues unfold. Investors in SoFi should remain vigilant about broader economic shifts, as these macro factors could have direct and indirect effects on the company's stock price in the coming months. In conclusion, SoFi stock has faced both internal and external pressures, but demonstrated resilience amidst a volatile market. With an interesting mix of options activity, short interest adjustments, and global economic factors at play, SoFi's performance in the coming months will be shaped by both company-specific fundamentals and broader economic dynamics. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.